Well, Bitcoin has been consolidating at last week's low for 2 days now. In this video, I'm going to show you exactly what that means. But before I do, I just wanted to show you the snow that is falling outside the window right now. It is 9 a.m. in Iceland and it is still pitch black outside. Check this out. It feels like it's midnight, but it is literally really late in the morning. And this is how it is. We don't see daylight for another 2 hours, I believe. But check out this snow. All right, I'm going to go downstairs quickly, have some breakfast, and then I'm going to come back and we're going to look at the charts together. As I'm currently filming this, it is the UK session on Friday. Now, just a reminder, UK session on Friday is usually where the weekend trap gets set. We can see what's happening in this red candle currently that is forming right here as I film this, that we've actually had an attempt again to break the low of last week, which was that 40,300 level. So we've spiked to it again. This current candle is bringing us back down after that attempt. This actually could be the trap happening live. I want to see how that candle closes and what happens on the follow through. But whilst that's doing its thing, let's just talk about the price action so far this week. And I just want to take you back to a reminder of how the model works. So the week usually starts with a weekend trap, which is just a sideways consolidation. Following that, you will have an M or a W, and that will lead to the start of the week's move. And that tends to happen sometime Sunday, Monday. So if we have the M formation, we would expect a 3-level drop, followed by a W formation to lead to a 3-level rise. Oops, I ran out of room. And then that can take you back into the weekend trap. So what happens here is you have your false move at the start of the week, which is designed to take out traders who made bad decisions on the weekend. Then you have your trap around the middle of the week here as we're trending down and people believe we're going to continue down. They continue opening shorts. Amateurs will short at the worst time possible, and that traps them here when we end up having a reversal in trend. And then on Friday, we have the weekend trap, which is usually the way price action moves during the UK session. But lately, since the ETFs have come out, it's actually been extending into the US session. So that's what I want to look at now. But Friday UK is usually, when we're having a typical week, it's the best point to take your profit. So I want to see if we're actually going to move back into the typical pattern now, or is there something that we can actually trade during US? So when you keep all of this in mind, knowing it can go the opposite way as well. So W formation would lead to the start of the week up, midweek reversal would take the end of the week down. So when we're having a look at this and we go and apply it to the current week, we can see here, this was our weekend trap and the M formation was formed here, which took us down. Now the down move here only lasted 2 days in this case. That can happen. It's not an exact science, otherwise everyone would figure it out. And our W formation was actually a V-shaped recovery, which is just, it's another way to identify a reversal. And yeah, just another reason why you have to learn the entire method in full if you want to know how to actually catch all of these pivot points. But after that final move down, we knew that it took out the liquidity in this red zone. We talked about that on this channel. There was a big area of 3-month liquidity between 38.6 to 39.6. And you can see here, this is exactly where we wicked to, just below that 39.6, wiped it all out. And so that liquidity is now gone. And we also had in this green box, they were the buy orders that were waiting once we did hit that area, and we made it halfway through there. So that is all irrelevant now, but just showing you how what we had talked about on this channel prior to these moves happening has ended up being where at this point in time, the short-term support was in. But now we have to assess what's been happening since there, because we had this initial move to the upside. This here was the first test of last week's low. So just a reminder, last week's low, when we break below it, usually comes back to retest and act as the new resistance. So last week's low would act as support last week, but in a new week, if it breaks below it, it would act as resistance. If it stays above it in a new week, it would continue acting as support. So in this case, we're kind of looking at that last week's low as a resistance right now, because we've got this one attempt here, we've got another attempt here, and an attempt that is happening right now. But here's the thing about it. There's one kind of positive thing about this, and this is why I'm not really looking to short or thinking that we're going down just yet. And that is because This whole period here, so all of yesterday's price action and all of Wednesday has basically been a big consolidating box right here. And that whole 2-day period of consolidation has consolidated at resistance. That's normally actually a positive sign for a breakthrough to the upside. So for me, I haven't actually exited any long yet. I did take a long down here. In the Discord, I talked about this blue vector that is still highlighted. And on the 15-minute time frame, which we're on right now, I'd alerted the community that if price did not come back into that blue vector candle to the bottom of it, then we could be going up from here and it would be a good area to take a long. So we had multiple wicks here that held above the blue vector, and any of these candles right here would have been the trigger to open that long position. So that's where I went long, and I've just been waiting to see if we can break out to the upside of this consolidation. And the positive about it, whilst I do see the 3 attempts at the low of the week that haven't broken just yet, the positive about it is that I also still have higher lows, really. So I'm not exactly worried yet, but I'm conscious of the timing because it is Friday, and Friday's where the weekend trap is made. So let's go and have a look at Friday's price action since the ETF launched. Now, this was last Friday, and look at what the US did. Now, usually the trap is actually set in UK, where UK will open and run a false move one way. Then during the session, it basically recovers that false move. So it will run a trend, a slow trend, the opposite direction to the false move, and then it will finish out the UK session with a repeat of the initial opening move. So it could look something like this, right? And I guess that kind of did happen here, but it was really just consolidation. But look what the US did. The US opened with a sharp move down, which is what created the low of the week for that week, and then a fast recovery up, a V-shaped recovery up. So that was of definite final damage to trap people into this weekend sideways price action, where people would have guessed that the bottom was in at this point in time and open long positions here because it wasn't retracing enough and they didn't want to miss out. They thought the week was going to open and continue up, but then also the other way where people may have thought this was resistance here and open short. So it doesn't matter whether longs or shorts are opened on a weekend. It just matters that liquidity is provided, and that can only be provided if retail open a position. So the damage was actually done on Friday in this week. Let's have a look at the week prior. Now, this was the Friday after the approval, I believe. So yeah, it's been doing this for the last 2 weeks. Again, have a look at the UK price action on the Friday, where we just consolidated again. We didn't actually have the typical behavior, but US made the move to the downside. And look, once again, they had that spike down on Friday, and then that trapped people into the weekend consolidation where price did nothing. So the thing is, this is happening whilst it's happening. Whether this is going to be a change in behavior moving forward because of the ETFs, it's too early to tell. We only have 2 weeks of data right now. But whilst it's doing that, whilst this is its current behavior, it can potentially mean that there may be some really good scalp opportunities in the US session on Friday if you can happen to pick the move and set yourself up during UK if UK is consolidating. And that's going to work until it doesn't. And that's just a matter of, kind of waiting to see what happens. So the trick today is going to be to see if US does make the big move. Now, if you are also currently long, which I know no one's long, like everybody's calling for lower prices and whatnot, just remember, this is very short term. This doesn't make me overall bullish or bearish. I'm on a 15-minute time frame. So at most, if I'm bullish or bearish, it's for a maximum of 2 to 3 days. So I just want to be clear about that. I'm not saying bottoms in, we're going to 100K. Like, you have to take the sentiment of a trader by the time frame that they're talking about. So if I'm talking about a 15-minute time frame, 3 days at the absolute most during the week. But now it's Friday. Like, this, what I'm saying in this video could only be relevant for the rest of the day, essentially, which means I've got to shut up and get this video out really fast. So moral of the story is, what you're waiting for now, if you're going to close this trade before the weekend, if you happen to be long, then you're going to wait to see if we can break that low of the week and get back above it at the 40,300 kind of area. If it does, it might do a false move up to the 800 EMA, which is at 40,800. Let's have a look at the heat maps and see if there's a hint of anything going on there. And whilst this is loading, I will tell you guys, if you are looking for somewhere to trade, there are a few exchange links down below that you can choose from depending on what region you're in. I personally trade mostly on OKX and Bitget. They're kind of my favorite. I can execute really fast on those exchanges. They have a little calculator when you place your trade that tells you how much you're going to lose if you're wrong. So I don't need a separate calculator to work out my risk. I can just go in there, do it. And being a day trader, I need to get in and out fast. So I really, really like those two platforms because they suit my way of trading. And also BingX is very similar like that as well. But the advantage of BingX is that you can also trade commodities on there. So if you do like trading things other than just crypto, definitely check out BingX because you can trade commodities but earn crypto, and like that's kind of what I want. So I love those exchanges. Check out the links in the description down below. They get you access to our Discord and all of that stuff. So looking at the heat maps, there's really not much for me to be excited about above or below price at this point in time. The highest amount of short orders I can find, which is not significantly high, is 40,800. I just spoke to you about that level. So there's that. Below price, look at this. All of these shorts that were here, I talked about these being potential false orders during the week. If you happen to miss those videos, be sure to go back and watch them. But I talked about them and look, now they've disappeared. So yeah, that's that. This isn't giving me a lot of information. That just means I have to go based off the candlesticks alone. We might get our false move weekend trap to the actual upside today, and it might take us to that 40,800. And if we do, that's where you should consider taking some profit so that you don't get trapped into the weekend if you're in a short-term trade, or at the very least move your stop loss so that if the weekend does swing it back the other way, or if US swings it back the other way, which they absolutely could, it doesn't take you out in a loss. You know, putting your stop loss somewhere under this consolidation would mean that, sure, some of your profit gets taken away if it swings back really fast, but at least you're collecting something in this little area here as opposed to getting fully stopped out from wherever you put your stop loss. So the only thing I don't currently like right now is the wicks to the upside of the candles at the low of the week. That's the only thing. So if I'm to exit my long position anytime soon, today, before the weekend, it's going to be on a structural change on the 15-minute time frame. And what I mean by that is right now I'm continuing to have higher lows. Right, I have equal highs, but I have higher lows. So there's nothing for me to worry about right now. However, if price comes down and breaks maybe below 50% Asia, which is at around $40,000. So if price comes down and breaks that, then gives me a lower high that retests somewhere around that area, that's going to be my hint that this consolidation is not going to lead to a further move to the upside. That's going to be the highest area for me to take profit on my day trade long position to get out and then just enjoy my weekend. I would expect price will break down if something happens like that. So that would be my area to take profit should I see a lower high form from here and price fails to get back above the low of the week. However, for as long as we're still creating higher lows and we're still attempting to break that low of the week, I personally do not have a reason to exit my long position. And if we get up to the 40,800, that's where I will reassess. If it looks like it's a false weekend move trap that's, going to do a full rejection in the US, take profit, enjoy my weekend. But if it holds there, if it consolidates, that's where I'll just move my stop loss and potentially try to hold through the weekend. Let me know in the comments down below if you actually caught that long position on Bitcoin this week. I'm really curious to know because this has been a week where literally everybody has been calling for lower prices. And whilst we may macro go down further, it's not proven that support is in yet on a higher time frame. As a day trader, that was a 3-to-1 trade at a minimum, which means if you were risking 1% of your account on that trade, you've made 3% profit whilst everybody else was telling you price was going down further and people sat on their hands and did nothing. So every little bit counts, when there is not a lot of volatility and price isn't moving massively, just collecting short-term profits here and there that increases your overall account And just to give you an idea, if you were trading a $100,000 account, then a risk to reward of 3 to 1, where your risk is 1%, means that you are risking $1,000 to make $3,000. So 3% might not sound like much, but when you consistently bank small profits over time and you compound your trading account, one day you will get to a $100,000 account. And a 3 to 1 risk to reward means that you can make $3,000 in the space of a couple of days. That's not a lot of work, you know. The entry presented in US session on Tuesday, and ever since Tuesday, I've only had to look at the chart on my phone maybe 2 or 3 times just to monitor it. And I've spent the rest of the time exploring Iceland and enjoying my life. So, you know, people are always waiting for altcoins to move 100%. That's not how we make money. How we make money is small compounding profits along the way, daily, chip away little by little by little. It means that even when there's low volatility and people who trade 4-hour timeframes or daily timeframes and sitting on their hands for a month or two, we can still bank profits, small profits, every few days. And that's what makes this method so powerful. We didn't have to sit on our hands. We predicted that the move would open to the downside at the start of the week. The bag flip is always around the UK or the US session, usually on Monday. If it doesn't happen Monday, it happens Tuesday. We saw that it happened on Tuesday. We're able to get our entry and basically have a couple of days off whilst that trade plays out. Now, the only thing we have to do is come back on Friday to check if it's time to take profit. Now, you just imagine if you build your trading account to that example and you're only risking 1% to make $3,000 at worst. You know, most of the time when we have volatility, we can get a 10 to 1, but worst case scenario, a 3 to 1 is still not bad. If you can do that twice a week, you're making $6,000 a week. But it takes time, practice, and patience. You're not going to get to a $100,000 account in day one. You know, it takes potentially many years depending on where you started. But it also means we're not in the market long enough for the market maker to wreck us and take out our profits, because we understand what they're doing. We understand the price action and we can trade alongside them. And we know when they're likely to make their false moves to trap everybody else, and we don't have to be part of it. So if that's something you want to learn, check out the links in the description of this video. I do have full courses on all of this. I do have a whole community. I have a big team of traders. I've got guys that have been with us for 2 years now since we started in day one. When you come into the Discord, you'll see them. They are called the OGs, and they are in there all the time helping everybody out, helping them get up to speed with this method. So check that out if you're interested. Also check out the links for the exchanges down below. Have an amazing weekend, and I will see you guys next week.